Professor Tarullo, good to have you with us to weigh in here. I guess you were among those who believed the Fed had found itself somewhat behind the curve on inflation coming into this year. Does the plan as set out by Powell and the committee yesterday get them back in line with inflation? And do you agree that the risk of recession right now is not all that high?
Well, I think yesterday was mostly about the Fed's getting its policy position more aligned with its external rhetoric and, of course, market and public perceptions. But I suspect that the harder choices are yet to come. They created some optionality for themselves yesterday, but really there are still some disconnects in the story that they're implicitly telling about where the economy is.
What would those disconnects be in terms of they don't really believe there'll be much of a slowdown or a give back on unemployment?
Right. Well, that's right. I think you've zeroed in on it. I mean, essentially, if you look at the projections and you look at what Chair Powell said yesterday in the press conference, on the one hand, the Fed regards the economy as very strong, and as has been widely noted, the chair indicated he thought the labor market was tight to an unhealthy level, but they're also basically projecting a series of incremental hikes that get them just around the neutral rate. So accommodative policy for a while to come, and then only a slightly contractionary policy. That would be, with, as you say, very little effect on unemployment. That would be a very soft landing, obviously. And so implicit in that story is the idea that a good bit of inflation we're seeing now is supply-side inflation, which would be transitory, although they're never going to use that word again, I don't think. And if you don't believe that the inflation, that you're going to get that help from inflation moderating sort of on its own, that's where the hard choices come, I think.
So in terms of those hard choices, are the possibilities of the Fed having to rise above neutral now increasing, especially given some of the commentary we did get yesterday?
Well, I think they're facing downside risks in both directions, which is not a comfortable place to be. I think some of the people who have been on CNBC in the last 18 hours or so, I think, have said that both inflation, higher inflation risks and lower growth risks may be elevated at this point. And of course, all of that is driven by, or it's not driven by, but it's exacerbated by the situation in Ukraine. And as you know, central banks have a hard enough time projecting what's going to happen in the economy. They have an even harder time projecting what's going to happen in geopolitics.
Yeah, I mean, it's certainly a perfect storm right now, which raises the question to me, looking back through history, how successful has the Fed actually been at achieving one of these soft landings when it is hiking into a very inflationary environment?
Not highly successful, I think, would be, and it's not limited to the Fed. It is not an easy thing to engineer. That's one of the reasons why you get these debates, at least pre-global financial crisis debates. Should we start raising rates now in an anticipatory fashion, even before we've seen the prolonged effects of inflation? So it is difficult to engineer that, and they're obviously aware of it. But that's where I think the harder choices are going to come. And it's not in the nature of this particular Fed, I think, to lay out a very pointed narrative about what exactly they think is going on in the economy. You heard Chair Powell use the word nimble. I use the term optionality. But I think at this point, they're very much going meeting to meeting.